Okay, folks, welcome to Thursday Night Stock Charts Live. This is Bob Desmond, and it is Thursday the 19th. Happy Thursday. All right, what we're going to do tonight is we're going to do more of an open mic night. I know that there are a lot of people out there that have questions with regards to symbols that they're watching. I wish I could do all the symbols that are offered up for me to review. I simply can't do it. So the way I'm going to do it tonight is I'm going to go over, I have a list of members' requests that they asked me to go over. I have to defer to members first. It's only fair. But I do have open the super chat, and I'll go to those people that most want it, promoted it. And you don't have to join, and just do a super chat. And if I have time at the end, and there are people out there that have symbols that they want me to review, I'll try to get to them, but I will go to the people that have offered up the most interest in supporting the channel. So members first, then those for the super chat, and hopefully I get to everybody. Hey, Richard. You got it, Richard. Richard is one of our members. BA and SPY. Okay. All right. I'm starting this off right now with the dollar, and it has again begun its march up higher, and this is not a good thing for commodity plays, gold and silver, the miners. Although they've held up very well in the face of a very, very strong U.S. dollar. The demand for dollars is very strong, and we're paying the price for it. Our exporters are going to pay for the price for it as well. So if you think that we've had a lot of new debt issued to try to squelch this new crisis, you haven't seen anything yet. They're going to throw the kitchen sink at the U.S. dollar, trying to knock it down, meeting the federal government. Excuse me, my voice is going again. Okay, let's take a look at some of the charts, where we're at on this Thursday night. I want to kick things off with the yield curve. I don't think this is just updated. Okay. So the yield curve now, and once we begin to steepen, there's not much stopping the rise of the yield curve. It takes a pause every once in a while, but generally it's a very, very vicious rally up higher. And you can see overlaid here in blue is the S&P 500, and generally it diverges dramatically from the yield curve. We can go back as long as you want, 40 years. And here you can see steepening of the yield curve means weakness for the S&P 500. And we are just beginning. So for those that are out there thinking that we're in a correction, we're not. This is a crash. This is the beginning of a major, major crash. And while we may get a rally in the next several days, and it could be a rip your face off rally. I'm talking about easily 10, 15%. Hey, Jay, welcome. I got your quotes, Jay. You'll think you're in the beginning of a new bull market, only to see it peter out, roll over, and then quite possibly break down to new lower lows. So if you go into this crash, this bear market, knowing what to expect, you'll come out of it okay. So right now, our strategy is to begin building on beaten up names. We did some buying this week, not heavy buying, but we did some buying to get long, and we're looking to add more. We are expecting a rally. We have seen support levels hit going back to, on the S&P, I believe it was 2017. We'll go to that chart in a moment. And for the IWM, the small caps, back to 2016 lows. So We've bounced. We're consolidating. I do believe that we are going to get a rally. The VIX is extremely high. And as they say, when the VIX is high, you have to buy. When the VIX is low, you got to go. Now, the only problem is that I don't think the VIX is going to go as low as it previously has. I think that will pull back and then set the stage for a new bull run up higher. Hey, Kat. Canadian dollar crash. I'm all U.S. dollars. Yeah. A lot of countries are. That's the problem. Okay. So what I'm concerned about here is this on the VIX. I'm worried about what we may be setting up for. And it could be me reading the tea leaves a little bit too much. But it's my job to worry. And what I'm worried about here is that we may be bull flagging out on the VIX. And while we may be thinking that we're ripe for a rally, the VIX may have something else in mind. Hey, Sam. How are things going over in Italy, Sam? And when you take a look at the monthly chart of the VIX, we haven't yet hit the highs of 2008. RSI, we have broken out to a new all-time high on the VIX. Sorry to hear that, Sam. Really am. For those folks just joining in, I'm doing, hey, Pre-Jag, how you doing, brother? I'm doing quote request for members, and then I'm going to go over to those that are doing, I'm going to sort by Super Chat because I only have a limited amount of time tonight, and really sorry to hear that, Sam. Sam, one of our dear followers and viewers, is over in Italy, and they're having it really, really bad over there. Very sorry to hear that. Many prayers. Okay, so any sign at all of the hey, Franklin, I got your comment. Thank you very much for your concern. I appreciate that. I meant to get back to you. Sam, any signs whatsoever that the new cases in Italy are beginning to subside a little bit, wane at all? And there's a question out there for you, Sam. Where are you from? Hey, Terrence. God bless. Very sorry to hear that, man. Very sorry. All right. All right, let's go over some of the charts. We've covered the VIX. We've covered the yield curve. Bergamo City is not good. I'll check that out later on. Who would have thought only a couple of months ago we'd be in this situation right now? It's like the perfect storm. All right, the chips. I'm waiting for a recovery in the chips. What you're seeing right now in this market is deflation. You're seeing it across the commodity spectrum. The dollar is certainly help with deflation. At some point in time, though, the impact on the economy is going to hit very, very hard because we're not producing goods. And those goods that remain are going to demand a higher price. And when the Federal Reserve continues to print more money and make money very, very cheap, you have a lot of money chasing too few goods. That's inflation, okay? And you're going to see inflation begin to heat up fairly soon. So get ready, folks. This is probably a temporary bout of deflation, but what we're looking for, our strategy moving forward is twofold, actually threefold. One, we are looking to build on gold, the gold mining trade, and silver. We've been buying silver this week. We're at historic lows on silver relative to the price of gold. It's never been seen before. We've been buying silver. We plan on adding more. We plan on riding the rally up, the counter trend rally up on this market, watching for the topping out, then shorting into that rally, and ideally enjoying the ride back down. Maybe we're not going to break to new lower lows. Maybe we're going to get a higher low. Maybe we'll retest this recent low, if assuming that this low holds, and we'll have to cover. But ideally, we would have made a profit. But all the while, we're going to be staying long of silver, the gold miners. And what I also want to be buying when the dollar turns, when the dollar begins to roll over, I want to begin buying emerging markets. Why? The reason is that they're commodity producers. If the dollar's pulling back and you have demand for commodities increasing, their economies do well. If their debt is priced in U.S. dollars, if the dollar is declining, well then that's a tax cut for them. The United States, it's going to take us a couple of years minimum to work ourselves through this absolute catastrophe. So I think that it's going to be the emerging markets that benefit first before the United States works off this amazing amount of debt that we've piled on ourselves. June, TBT calls, bought 2 days ago, are up 20%. Yeah, we're short of the TBT as well. Short of the TLT using the TBT. Can't help but think that there is one big leg down, and I think that there's a case to be made for that when you take a look at the VIX, if I'm right here. Is what we're seeing here on this daily chart a bull flag setup? Maybe. It's not a guarantee. Maybe. We are putting in lower highs on price. We haven't broken down to new lower lows yet. But I will say this. It's Thursday night. The week is almost over. This is where we do a pulse check of the weekly chart. So let's take a look at how we're looking on the VIX from a weekly perspective. We have RSI at 88.57. It seems insane. But remember, this is the VIX, right? So it is insane until all of a sudden we're up in the 90s. So we want to give all due deference to the VIX. There's a tremendous amount of fear out there. And while I would love to come on here right now and say, there's no way the VIX can go any higher. Look, you have topping tails on top of your candlesticks. There's sellers of volatility. Well, I could have said that back here. You had topping action here. You had topping action the week after. You had topping action last week. What did we do the subsequent weeks? We made higher highs. So I'm not ready to say just yet, that the VIX is done going up. I want to give it all due deference. And that's why I want to stay off margin. I'm going to throw up another Bollinger Band here. I want to bring up the 5 standard deviation Bollinger Band. Wrong. That's the wrong one, Desmond. There we go. We'll make it purple. We're flirting with it. And normally when you begin to pierce that 5th standard deviation Bollinger Band on the VIX, you get a pullback, a significant pullback. But these are crazy times. The thing that's different about this sell-off is not so much the credit crisis. It's the fact that you have the Federal Reserve that's trying to fix a huge unknown, which is the impact of, I can't say the word fully, so bear with me, the C virus, because I'll get blocked or whatever on YouTube. They don't like when you say that word. It's not family friendly. Uh, the C virus, the cerveza virus, um, some moron over at Morgan upgraded Tesla. That got cat's ire. Uh, I forgot what I was saying. Anyway, we can go higher here on the VIX, and let's just give it all due deference. Sam, Bob, this is Bergano News, but don't panic, please. Okay. Okay. Hey, Pat. All right. Let's take a look at the major averages, where we're at so far this week. The Dow Transports bounced. Yeah, well, while if you go back in history pre-drag, gold, the miners, silver typically sell off initially when the yield curve begins to not invert, steepen, and then they play catch up in the next couple of months. So we have a waiting game here before we can say that we have a bottom. But ultimately, once we begin to see a correction in the U.S. dollar and we see some of the fear leave the market, I think that you're going to see sector rotation into the gold mining stocks, gold, silver, and they'll do very, very well. Just like after the financial crisis, you saw them sell off, and ultimately they rallied. And in fact, the gold mining stocks diverged from, let's bring it up here. Here's the yield curve. Let's go to, I'll give you the overview here. I'm going to drill down to a magnified view of the post-financial crisis yield curve. And we'll zoom in here. I'm going to overlay GDM, which is the gold mining index. We'll make it orange. And we'll update that. All right, so here is the financial crisis, right? Overlaid in blue is the S&P 500. Obviously in candlestick is the yield curve. We are currently at the beginning of a major steepening, just like you saw back in 2007 into 2008. When the S&P 500 rolled over, so did gold and the miners, but then they bottomed. Gold bottomed out first, the miners second, and then ultimately they took off to outperform the S&P 500, peaking out in 2011. I think that's what's setting up again at current, and that includes silver as well. Let me see if I can overlay silver. We'll use the SLV. I don't know how much history there is with the SLV. We'll make it gray, appropriately gray. We'll pretend that it's silver. All right, so here's silver. It sold off and then went on to have a huge, huge rally. It took about 2 years to make new all-time highs, but it did it. It rallied along with gold, and at one point, it even outperformed gold. So I'm expecting the same in the future. It's just a matter of remaining solvent. right? So stay off margin and keep your gunpowder dry, and there'll be opportunities to buy the dips. Let's, all right, the transports. I'm going to blow through these averages. I'm going a little bit long in the tooth here. We overshot. We came very close to the lows of 2016, and we bounced. If we fail to close above this, well, you know what? Let me update this because it's inaccurate. All right, so we're back above support. Okay. All right, so nice pop this week. Doesn't mean that we're not going to come back down again next week, retest, could do it again the following week. So that's why it pays. Just let this market consolidate. There's a lot of people trying to get liquid. And every time you see a rally, they sell into it. And that's why even today, if you take a look at, I mean, it was even the S&P 500, you know, it had a fairly good day. We'll go to a 15-minute chart. Christ. Nice day today, and then they began selling into the close. So if you were buying intraday, you may have been disappointed by the close. And that's why, you know, what I want to see us rally, pull back, higher low, and then begin to buy more aggressively. Right now, I still think that we have a lot of bobbing and weaving to do here. I do believe we're going to rally, no doubt about it. Manoj, Bob, what are your stop loss levels you recommend for Nugget and USLV? It's a tough one. That's really tough. I mean, here's why it's tough with NUGT. I'm very, very disappointed with NUGT because if you take a look at the GDM, we are up on the week. When you take a look at the GDX, we are up on the week. When you take a look at Nugget, we were up, now we're down. So it's difficult for me to say where I would put a stop loss order because I'm in accumulation mode. And I'm trying to understand the price action here with NUGT. So I'm just building a position here. I'm nibbling. So I'll take a little bit more pain and build on the position. But this price action so far this week, I'm looking to see how we close out the week, is a bit concerning. And I may choose another investment vehicle rather than NUGT if we don't see a sharp turnaround and a quick correlation with the GDM and the GDX. More so the GDM it trades in kind with rather than the GDX. The GDX only makes up 4% of NUGT. It correlates better with the GDM. So I'm watching it. USLV, I'm not using a stop right now. I'm accumulating. If it goes down lower, I'll buy more. Why? Take a look at where we're at. Here's the gold-silver ratio. This is the amount of ounces of gold or silver that it takes to buy 1 ounce of gold. We have never, ever, ever, all-time view, never been this cheap on the price of silver. If they want to throw more silver my way at these prices, I'll take it all day long. So I'm just going to keep on nibbling. Eventually, what we're going by here is a strategy, and that strategy is that we are in an accumulation mode. I mentioned before that we're looking for a recovery in both gold, the miners, and silver in the coming months, but it's going to be a waiting game. So just stay off of margin. Not that you can buy too much NUGT on margin anyway. It's like you need 90% cash to buy it on margin. All right. Going to my question before, given the high recent correlation of NUGT with the market, is Nugget still the best way to play gold in this bear stock market? The correlations change. You know, yeah, you got to keep in mind that the back in 2007, 2008, and even back in 2000, the gold miners pulled back because they're stocks. They pulled back with the S&P 500. But as gold began to rally, so did the gold miners. They actually disconnected from the S&P 500. And while the S&P 500 was going down in 2007, 2008, the gold miners were going up. So it's hard to find a constant correlation between the stock market and the miners. It's not always constant. Even it's not always constant that you have a correlation between gold and the miners. They disconnected for the past couple of weeks. Gold has been holding up where the miners have been selling off. You know, granted, ultimately, gold eventually sold off as well, but nowhere near as much as the gold miners did, or the stock market for that matter. Gold has held up relatively well. So I think that longer term, the story is, think about this. The long-term correlation between gold and the US dollar is undeniable. They generally trade inversely of one another. We'll use the GLD. We'll do a correlation. We'll use the UUP. Now keep in mind that gold is priced in US dollars. So you would think that with the dollar ripping to multi-year highs, that gold would be selling off and selling off hard. It's not. The dollar back in 2017 was in a decline. Gold rallied. Here, let's go back to, let's use a monthly chart, clean this up a little bit. The inverse correlation is undeniable. But take a look at present day. This is astounding. The fact that you have the dollar ripping through the ceiling, yet gold is holding the lows of 2019. The dollar is at multi-decade highs, and gold is holding in there. So this is serious price action. You know, granted, this monthly candlestick is bearish. It's concerning. I would like to see a rally back on gold. No doubt about the fact that you have the dollar that's adding pressure to gold, but it's not breaking down anywhere near as much as the U.S. stock market is. And take a look at the correlation. They are trading in tandem. Roughly about 75% of the times, they're trading in tandem at current. That's crazy. This is not going to last. So that's my story. I'm sticking to it. Tech during this time of a cycle is generally very weak. Growth does not work. And in this part of the cycle, you want to buy commodities. You want to buy metals. The utilities eventually will catch a bid. I like the utilities. Eventually, they'll begin to recover, especially with yields this low and the utilities at these price points. I mean, think about Think about the XLU. It's down 16.5% on the month. And it's yielding over 3.5%. When you have the 10-year Treasury yielding 1.12%. So, granted, you'll take a little bit more risk, but you'll get some upside appreciation as well on the price of the utilities. But you're getting paid a nice yield. So I think that eventually dividend-paying stocks with strong balance sheets. Beware of those dividend payers out there that at current that are showing really nice dividends, but have a lot of debt because those dividends are not safe. Be very, very careful. Ford, they just cut their dividend. I think they eliminated it entirely, and I wonder how their shares did today. Look at this. Going into the day, 13.5% on yield. Think about the poor son of a gun that bought it, betting they were going to get paid that yield. That's done. All right, let's go to tech, still relatively strong. I think it's on an individual basis. Netflix was up today, but people are staying home, right? So I think if it's tech, like Google, I believe was up today. Yeah, it was up nearly 2% on the day. Closed off the highs of the day. Netflix, it closed up today. Up over 5%. But this to me, let's get rid of the dollar. This to me is a chart that you have to sell. You have to fade. You have to fade the rally. Look at this wick. So right now with Netflix, what I would be looking to do is take my crayon out. To me, Netflix is setting up as a short. We see a few days of Netflix stalling at this price point, and we begin to roll over. You're going to see shorts lean into Netflix. And this is where every time it rallies back, shorts are going to lean into it. They're going to take it down. If we break down to new lower lows, this is the new line. This is going to be your new upper band of resistance. You're going to want to short into it. So a lot of opportunities out there. Yeah, I saw that. I didn't read the article, though. It was weird. I guess because there are so many people that are home. I guess. I didn't read it yet. All right, let's go to some chart requests. All right. Joe. I know this chart. Okay. A commodity lover. Love it. So commodities, this morning I shared with you, it was down today, but one of my favorite charts of the week was, I'll come back to this chart, was Kellogg. Kellogg had been on a tear this week. Today it gave it all back, or most of it, but anyway. But people are buying food goods. They're not working, they're going to be eating. So Joe, nice week. Let's go to Trend Spider. Okay, so here's Joe on a monthly basis. We broke out back in November of 2019, failed to hold it, held the support level at 29.94. We appear to have broken out last month. We did. Now we're doing a retest. So on a monthly basis, the price action is looking good. What we need to see here is a higher low on these Stokes. I hate Stokes that are declining because rallies tend to fade when they're down below 50. Weekly view. We're inside of a triangle formation. We've broken out on a weekly basis on RSI. Stokes is still meh. I don't think there's anything wrong with, if you're betting on inflation, then there's nothing wrong with making a purchase of Joe. Just keep a stop loss right under the month's lows. And then add more once we begin to break out above 38.44, because that's a confirmation that your hunch is now accurate. Daily chart. On a daily basis, we broke out. Nice. We have our Stokes, which are rising. Let's check out the raindrop charts. Nice day. Raindrop charts are a mixture of VWAP, volume-weighted moving average, and candlestick charting. And you could see that there was a lot of volume to the upside, a lot of buying at the back half of the day. That's what you want to see. That's healthy. So it looks as though this is going to be a price point that is going to be defended. So I'm going to take you back here. And I'll share this chart with you. Hey, Norris. By the way, I'm holding NUGT, EEM, and XLE. Is XLE going to suffer more? I think XLE is probably going to bounce, Norris. I think that it's going to have a long recovery, but I think we're going to bounce. We'll go over it. Kat, if we have time, I'll go over it for you, no doubt. Sam, God bless you. Bob, oh, thanks. And everyone, good night. Good night, Sam. God bless you and your family. There's always good news. Maybe with all this people locked in the house, population could increase. That's a good point. That's right. There has been an issue. I mean, yeah, there's going to be a baby boom. That's a great point. There's a trade to be had there. Barone, hey, buddy. How about Gush? They're going to do a reverse split on that one, I think, right? All right, so Norris, CCL, we have a lot to go over. XLU, Gush. We'll go over XLU and Gush at the same time. We'll kill two birds at the same. Not XLU, XLE. Okay. All right. So Joe looking good. I like it. Next chart up, DEAC. Never heard of this one. Diamond Eagle Acquisition. Ugh. I don't know what this is. Yeah, there's really no data here. I don't know what they do. I can go very short term. I can give you an opinion. It was overbought when it first came public. Lots of selling. We're retesting the support level. Stokes are rolling over, which I don't like. I wish I knew what they did. I can't get a feel for. There's not enough data here. I think that this fails. I think we're bear flagging out here. I'm worried that we break, and if we break, we're coming down here. We're breaking down. I don't like it. I don't like it. Especially in this market environment. It's got that whiff of speculation. I don't even know what sector they're in. Okay. Crash related to sports leagues being shut down. Gotcha. Gotcha. All right. Wish I had more input on. Let's go to an intraday chart. It's trying to fight the good fight. It managed to break out above a resistance level, but does it hold? You know, if you're long of it, I would just use a stop right below this support level here at around $10.50 and just get out. It seems very, very speculative. We're probing that lower band of support. I just get that feeling that we may break here. So me personally, I would avoid it. If you're gonna buy it or if you're long, just tighten up that stop. All right, HCA. Let's get rid of these. Let's go to the higher level view. All right, so it's broken, like everything else right now. Let's get some trend lines up here. There are no trend lines. Let's create our own. All All right, so the support levels from January of 16 held. We bounced. We're holding 83.52. If I were to get long at current, I would put a stop right below that mark. Weekly. A close above support here would be really nice. You know, even if we closed out the week where we closed today out, we still have resistance immediately above. It would be really nice if we saw a bounce above 87.43. We're a bit oversold relative to the third standard deviation Bollinger Band. We may pop here, but obviously the shares are broken. And most every chart I'm going to go over ultimately is a short, just waiting to happen. We're looking for rallies up and into a resistance level. Like at current, a lot of people are making the mistake. You know, they're taking their trend lines and they're going, okay, here's going to be my new upper band of resistance, right? No, that's way too tight. That's not logical. What you want to see is a rally up to this resistance level. These counter trend rallies are going to be rip your face off short squeezes. And you're going to, with it, these shares are going to move far and fast, and they're going to fail. Most of them are going to fail, and we're going to roll back over, and it's a good thing. And we're going to do at least a retest of recent lows. It's a good thing. You want to build that base. You want validation. So if I were to buy it here, it would be only as a short-term swing trade. It's not investable. Nice bounce today, I will say that. Nice. Look for a retest tomorrow of 81.79. If that holds and you see a follow through above today's high, you could buy that rally. But again, keep in mind where your resistance levels are. And I would be a seller into those resistance levels. Book your profits. You're going to get a pullback. Guaranteed you're going to get a pullback. And you're going to get a retest. So this is none of these are investments right now. Let's go to GDTC. A lot of strange ones tonight. Monthly view. This is the same chart. GDTC, is that accurate? Oh, let me see. GBTC. Couldn't read my own handwriting. Ah, Bitcoin, the trust. Okay. It had a good day today, Bitcoin. I think that in a deflationary time right now, Bitcoin's going to have its struggles. Once we begin to see inflation pick up, Bitcoin's going to do very well. My only concern is if and when the dollar begins to really deteriorate, is the government going to have a scope on the back of Bitcoin. So you can see we broke out back here in January. This is a monthly chart. Where did we close out the day today? Right at what was the breakout point is now support. Weekly view. Good reversal. Next week, we're going to want to see a pullback and a retest. And we must close out the week above this orange line here. If we get a pullback and a retest next week, I'd be okay with opening up a position. I try to wait as close to Friday to make sure that we close above this, what should be a support level going into next week. I will warn that we do have Stokes which are declining down below the 50 mark, and rallies tend to fade. So be careful. Let's make sure that we close out the week above this orange line. It looks like it's going to. That's the thing about bear markets, is that you'll buy a stock because it looks good intraday, it's up, and all of a sudden at the final minutes of trade, they sell it and you get suckered in. Same thing goes for if you're buying a stock on a weekly basis. It looks really good. Look at this. It's recaptured support. I'm all excited about buying Bitcoin, only to see by Friday afternoon, tomorrow, fade. And you're back down below the support level and you're left holding the bag. Don't let it be you. Daily chart. Again, nice pop today. I would really defer to that weekly chart. I like the Stokes here. Watch for a pullback and a retest on RSI. But Bitcoin is looking pretty good. Not bad. WW. What's WW? Oh, Weight Watchers. Duh. Broken. So this is what we're looking at for pretty much the vast majority of stocks out there. We're looking for short entry points. This was a short entry point. This rally up to resistance, reversal bar. It was an invitation to short Weight Watchers. And we've broken support. We're coming down here to $9.16. I would avoid Weight Watchers. I think it's a short. You can see at current, we're trading down below weekly support. Now, if we manage to recapture and close above the support level, I would wait for next week for it to fail. If it does fail, and then I would short it. Daily chart. You know, we dead cat bounced today. I just don't think it's going to hold. We may rally up here to $20.27, and then I think we roll over. So I would be looking to short Weight Watchers. I definitely wouldn't be looking to buy it. Boeing. Who'd have thought? Well, actually, I did call Boeing. Remember this chart. The infamous head and shoulders setup. I was talking about Boeing here. I said, watch, this is back in December. Watch for a break. We got the break, and here we are today. Did I have any idea that this would happen? No. No idea. No idea. I wish I could say I did. All right, back to Boeing. You know what? Let's stay on that chart for a minute because it's telling a story. This is a monthly chart. And at current, it's hard to see it. Let's change the Bollingers here. Let's change the red, the third standard to black. That should make it a little bit easier to see. Yeah, you could see here that we are trading well down below the third standard deviation Bollinger Band on a monthly basis. Weekly view. On a weekly basis, we're down below it in red here. Man, we took out support going back to February of 16. This is crazy. Let's see where there might be support below. If this doesn't hold, we're coming down here to 79.73. on Boeing. I think we rally first. Let's go to a daily chart. Yeah, we have RSI at 14.18. I think Boeing is a buy. If we break to new lows, that's where I would keep a stop. But I think that we're going to rally here. It's a trade only. It's not well, unless you have a very long-term time horizon and you believe that the management of this company is good. I think that they made some real serious mistakes. I would treat this as a trade like any other company. I mean, this is a stock that's lost its luster. It'll survive because it has to survive, but I mean, it could be the new GE for all we know. I mean, it's damaged goods. So I would trade this to the long side as a swing trade, and I would look to get out. Look for a retest. Does it hold? I don't know. But I'm confident that we are going to rally fairly soon here on Oprah lost $50 million on Weight Watch as well. You're welcome, Jay. All right, so that is Boeing. The spiders. What has been haunting me about the spiders is RSI. I don't like rounding tops on my indicators. So I'm worried that we may roll over here yet again on the spiders. When do I become less worried? If we begin to break out above resistance on the RSI. But we're like a coiled spring. Will we probably pop? Yeah. I think we could rally perhaps up to 270 on the spiders. And that's a significant rally. But then in all probability, we're going to roll back over again and at least do a retest of recent lows. It's more often than not that that's what happens. That's one of my late night charts I put together. I forgot what I was trying to achieve with that one. Okay, so weekly basis, we're flashing at current a very close to a doji formation. Want to call it a spinning top? Whatever. It's indecision. A lot of indecision. So I think that short term, it's good for a swing trade to the long side. Longer term, I think we'll rally. We're going to roll back over again. Do we get a V-shaped recovery like we had back in 2018? I don't think so. I think that we had a nasty sell-off, but we didn't have a credit crisis. This is a credit crisis. As much as people want to blame the virus, yeah, no doubt about it. That's added. It's magnified the problem. But we have a long-term credit crisis on our hands here. And people aren't paying attention to that. They're paying attention to the virus, not so much the credit crisis. That's the bigger picture. And nobody knows how to value these stocks. Nobody knows the damage. The analysts can't get data out of the companies because nobody's working. So How do they value these companies? So right now, the stock market, not right now, always is a discounting mechanism. It discounts future earnings. So if anything, they're going to take it to the low side. All right. So the spiders, I think we're going to pop here. Let's go to a 4-hour chart, see how we close out the day. I didn't like the close. You can see that, man. As a matter of fact, let me go to I do like these Stokes. Let me go to a 2-hour chart. Yeah. This is what I don't like. Bear flag setup on an intraday basis. If we wake up tomorrow and we have bright green futures, my guess is I'm not going to make a bet. I think the daily chart is bullish and we may rally. But looking at the 2-hour chart, the feel I have for the close today was that they sold everything off. So I get that slimy feeling that they may spike the futures tomorrow morning, green, and then let it fade into the close, leaving everybody with a horrible weekend ahead of them. So that's my concern with the spiders on an intraday basis. Daily basis looking okay. Weekly basis looking okay. We have 1 day left to go. And we know lately 1 day can make a lot of difference. I mean, we haven't had 2 back-to-back up days on the S&P 500 since mid to late February. Think about that. You know, you want to think about probabilities and say, okay, now we're due for one. Okay, but I still don't like the odds at current. I just don't like the price action. I don't like this price action, so I'm worried. All right, moving on. CCL, Carnival Cruise Lines. All right. So Carnival did pretty much as what we expected. It failed to hold support, and we did hit the single digits. How the federal government is going to bail out an industry that is not even U.S. flagged, I have no idea. So that's kind of a concern. So that's just one concern I have out there. The stock chart is oversold. I don't think it's anywhere near as oversold as it should be. I think that we're going a lot lower here. We may rally. I personally don't think it's oversold enough. Let's take a look at a monthly view, a quarterly view. Let's see if we have any historical support below. We probably do. Let's find out where that support level is. I don't think we're done going down yet. I think ultimately I would like to see a 6 handle on Carnival. And I don't think that the yield is safe. I think it's good that they took capacity offline. I just don't think that we're done going down yet. So I would love to say I'm a contrarian. I want to buy Carnival as a long-term investment. They're going to recover, and they probably will. The price is just not discounted enough for me right now. Richard, they are offering all of their ships for possible floating hospitals. That's a novel idea, isn't it? Alex, you are watching Bitcoin. What are your thoughts on price action when the mining stock when the mining is cut in half in May? Are you talking about Bitcoin mining? I'm not that smart. I look at charts, man. I know a little bit about macroeconomics. About Bitcoin mining. I'm reading ones and zeros. I'm a blank stare when you talk about that. I know it eats up a lot of energy. CCL, wasn't there talk of Buffett possible buyout? I hadn't heard that, and I don't think that it's cheap enough yet for Warren Buffett. I could be wrong. What do I know? But what are we looking at is a known PE. It's still got a PE. I don't think it's discounted enough. I think he'd step in when there's blood in the streets. And really, considering what this company's been through, it's oversold, or it was oversold. It's nowhere near as oversold as it could have been or should have been. I think it could quite possibly go lower here. Doesn't mean it can't have a short covering rally. There are a lot of shorts in this name. But I think ultimately it rolls over. All right. XLU. Let's go to utilities. Okay. I'm shocked by the utilities, to be honest with you. When you think about their input costs, coal, nat gas, oil, they're at a discount. And I'll be honest with you. Well, you know it. You remember. I started buying the utilities this week. And I'm rather surprised that we haven't seen more of a rally on the utility sector. My lights are on. My water's still running. So I'm not sure why there's so much pessimism with regard to utilities. I would love to hear other opinions. Maybe I'm missing something. But the utilities seem to have the most stable business at current, and one that has input costs that are very, very favorable. Yields are relatively low, so the cost of borrowing is low. I don't get it. So if somebody has an idea, please pop it into the chat box. I'd be truly interested. So looking at it on a monthly basis, the XLU, we're leaning into the third standard deviation Bollinger Band. We're at very close to the lows of the month. I'm sorry, this is a weekly chart. My apologies. I have this mislabeled. Let's go to a monthly chart. We have found support at the rising 50-period moving average. I'm glad you asked me about this one, Norris. I did not appreciate that. I like the utilities. They're safe. Growth is going to be dead for a while. People are going to want dividend payers that are safe. Utilities. Daily chart. Looks like they want to put in a new low. This is a tough one. I started nibbling this week. Would I want to buy more right here, right now? I would have to say no. I'm worried about a break below the 50.92 mark. Let's take a look at the intraday chart. Maybe I'll get inspired. All right, so maybe we have something going on here. All right, I'm going to talk a little bit out my butt right now. Forgive my French cat and the other ladies out there. All right, so what we may be seeing is a retest of the lows of the week. When am I wrong? If we close down below 50.92, I'm wrong. However, if we rally up and above this upper band of resistance at around, let's call it $55 per share, you may get, I don't know how many shorts are in the XLU, and I wouldn't imagine many, but you may get a rally here. Some institutions finding some value. It's yielding over 3.5%. So you have treasuries on a 10-year that are yielding 1.10. The utilities look pretty attractive to me. But again, maybe I'm missing something. You're in XLU as well, Terrence? Good man. All right, so I'm not going to save this because I used up all my charts here. I don't want to bore everybody with deleting old ones, so I'm not going to save it. Let's drill down to a 2-hour. And I'm going to go over to TrendSpider. I want to bring up the utilities on TrendSpider. Yeah, we've already rallied. I think we may be pulling back, doing a retest, and we may get a bid here fairly soon. I don't like MACD. Let's go to TrendSpider. Maybe I'm missing something. All right, so these are monthly support and resistance levels in dashed line, overlaid onto a daily chart. And what troubles me is that we are trading down below 53.21. If we were to close out the week above 53.21, I would feel a lot better about XLU and the other utilities. So could you put SO with XLU chart? You're welcome, Franklin. You're very welcome, man. Thanks for joining in. SO? That's Southern Copper? Oh, Southern Company. That's right. You want me to do an overlay? I could do that. Let me just clean up a few charts here so I don't get naughty lists. Okay, I'll do the overlay. What time frame? You want to do it on a daily, weekly? What do you want me to do? I'll do it on all. No big deal. We'll make it orange. They are correlated pretty much 100%. All right. So this is a daily chart. The correlation is 99% at current. Pulling back to a weekly view. I mean, the correlation is just Ridiculous. Monthly view. They do diverge at times, but normally they trade in tandem. Okay? All right. XLU, energy. All right, let's talk about Gush. Gush is a ETF that's kind of gone bust. Closed at 41 cents. You can't even really use RSI. I mean, it's damaged goods. I would avoid it. XLE energy. All right, we're still very oversold on a monthly basis relative to the third standard deviation Bollinger Band. $25 is support. Let's see whether or not it closes out the month above that level. Weekly view, RSI, 12 spot 1.5. We're going to pop here. More than what we already have. We had the biggest one-day rally in oil today, I believe, in all history. Daily chart. It's yielding 8.75%. I would expect that's going to get cut. Bullish key reversal day today. Very, very nice. I think we rally here. Very nice day. Higher lows on Stoke RSI, good volume. XLE is looking good for a trade. All right, we'll rally. Watch for the pullback. If we get a higher low and it holds, we break out to new highs, that's an investment. All right, what else do we have? I'm beginning to fade here. I think Cat wanted Apple, and we'll leave off with Apple. All right. All right, so at current, we're trading down below monthly support at 247.81. Which is bearish. Weekly basis, we are holding a support level. Let's overlay that monthly. So it's sandwiched in here between weekly support and monthly resistance. So I would give deference to the monthly resistance over the weekly support. And I don't like tech at the beginning of a bear market. I don't care if it's Apple or what have you. You know, right now, especially Apple, because of their exposure over in China and their component makers. Daily chart. I don't like it. I'm worried about a break here. If we make a new daily low on Apple, it could quite very well become a short. So I would be very careful here. If we break down below this support level at around 240.72, even if you want to use the week's lows, if we take out the week's lows, it becomes a short, whether it be this week or next week. I'm not loving the chart. I would personally avoid, and it may just be a short. And with that, folks, I want to ask you if you could please click that like button. I'd really appreciate it. Everybody have a great night. Thanks for joining. Everybody be safe. God bless everybody and your families, and be well. Have a great night.